The rocket is taking off. I want to talk today about rocket companies, Rocket Mortgage, and I want to talk about just how they're leveling up and they're changing the future of mortgage. And I'm going to share some very startling statistics and insights, and then hopefully we can share a roadmap on how to go forward. But I'm going to base some of this on Flavia Ferlin Nunes' article from last week titled Rocket Returns to Profitability in Q2 Yields Early Benefits from Redfin Deal. And what Flavia is doing is just outlining their Q2 2025 shareholder report, and it had a lot of data. And as I said, I'm not going to focus on the financial results, which I don't care about so much, but I am going to comment about how they're changing the industry and what it means to you and I. And so here we go. Here's the first thing. And by the way, the report came out like a week ago, and I read it, and it really took me a week or so to figure out what I thought about it and what it meant and what's the way forward. But the first thing that struck me is, about a decade ago, Quicken came out with a Super Bowl ad called Push Button Get Mortgage. And at the time, it was just really taxing on borrowers to go through the loan application process and get a loan. We had always just told them, what we needed and what they needed to do, and they didn't necessarily enjoy that. And so Rocket comes along and goes, hey, just push button, get a loan. It's as easy as that. Now, the fact is, they didn't have the technology 10 years to deliver that. It was more of a marketing slogan, right? Because really, only 8 to 10% of the borrowers qualified for that easy path loan. Most of them had to go through the traditional underwrite, the traditional process, just like everyone else. But in the recent shareholder report, Rocket reported that many of their refi borrowers are now going through a fully 100% digital experience that completes the application package in less than 30 minutes. And in fact, their goal is to get that under 10 minutes. And so in my mind, they're finally delivering the promise that they offered a decade ago. But that promise was super strong a decade ago, and today it's equally as strong. And it's not the speed. The speed doesn't matter. It's even not the certainty that the borrower gets. It's the removal of friction, making it easier to get a loan. That's the part that's changing. Now, the other difference between today and a decade ago is that push button get mortgage is now more available to every company. It's not easy, it's expensive, it's an uphill battle, but the technology is available that most companies will have a push button, get a mortgage strategy sometime soon in the next year, 2 years. Some companies are already very close to it. And so that's no longer such the great divide and no longer spooks us like it did a decade ago. But there's other data in the Q2 report that does kind of spook us. And here's the first thing I'm going to talk about, or the next thing I'm going to talk about, is their AI platform. And I'm going to share the statistics that they shared. And they don't need to be, embellished. They don't need to be, highlighted any more than just sharing it. Here's the first one. 80% of Rocket clients choose to work with the AI chatbot over a human loan officer. Think about that. So 80% of their clients go, nope, hey, I want to keep working with my AI chatbot. I don't need to talk to a loan officer. That's what they reported in their Q2 report. Now, they didn't say that. That doesn't mean that client never spoke to a human. They just said 80% of clients choose to work with an AI chatbot over a human loan officer. Holy smokes, that's a game changer. And then here's what they said. Now, you think that's surprising that people are choosing the chatbot over a human? This next thing then should really get your attention. The chatbot converted 3 times greater than humans on purchase leads. And they converted 2.5 times better than humans on refinance leads. Try that on. Okay, so people are choosing to talk to a chatbot, and the chatbot is 3 times better than a loan officer, or 2.5 times better than a loan officer. I don't know. That dispels a whole different future, doesn't it? And then their daily follow-ups with borrowers have increased by 20% using chatbots, ensuring that every borrower stays fully engaged in a timely way with no lag time. that chatbot's available whenever they want them, and it's really driving up the whole overall customer experience. And so this is a totally different world, because the question is, the question isn't any longer are chatbots, and chatbots even which are coming in the form of avatars, and avatars are just images of people with a voice bot that talk to other people, so it seems more human. But the question isn't whether chatbots or avatars are going to replace loan officers. The question is it going to replace you? Not just because it's going to replace plenty of loan officers, plenty. But the goal is it not to replace you or I, for that matter. And so how do we fight from it replacing us, which I'm going to talk to. But let's go through the rest of some of these results that they reported on their Q2 report. And the next one is the impact of the Redfin integration. By the way, these are going to be more startling numbers. All right, I'm just reading from the report. So here's the thing. So now on the Redfin platform, Rocket has a pre-approval button on every single house listing. So every house listing has, hey, get pre-approved button, push the button thing, right? So that new button in the Redfin environment generated 200,000 clicks last quarter. 200,000 people pushed pre-approval button in the Redfin platform. That seems like a lot. I don't know. Now, of those, 23% of those clicks turned into contactable leads. So 23%, so roughly 46,000 people now, the Rocket, platform could call on. From that, they converted 12% of the leads to an application. That is remarkable. So 200,000 clicks, they get about 46,000, contacts, the contactable leads, and they convert 12% of them. Whoa, holy smokes. And they're just getting started. That was only a partial quarter. Oh my gosh. And then on top of that, Redfin agents referred 7,000 clients to Rocket loan officers. Holy smokes. And so this is kind of what happens when we see real estate meets AI, enabled mortgage lending. And what we're really talking about here, and I know that I've talked about it before, but what Rocket is doing is they're building a virtuous cycle. That's an economic term, a virtuous cycle. And that's when a business model feeds itself. In a simple way to explain it, business model feeds itself, a virtuous cycle. And here's what Rocket's doing. They have top of the funnel, which is Redfin, right? So Redfin captures the consumers early in their home journey. And then mid-funnel is the Rocket companies, and Rocket Mortgage converts that customer, right? And they convert it using now highly AI-driven experiences, a fully digital mortgage experience, a super high conversion rate. By the way, really high customer experience scores, right? So Rocket lives in the middle of the funnel. And then, when the transaction closes, Mr. Cooper lives on the other side of the bottom of the funnel. They delight their customer in servicing, and then they feed future opportunities back to the top of the funnel for Redfin and Rocket. And that's why it's a virtuous cycle. It comes in the top of the funnel, through Redfin, comes through Rocket, out to Mr. Cooper, circles back, comes back to the top of the funnel, and you have this virtuous cycle where it feeds itself. And by the way, I can tell you, Rocket's not just interested in generating opportunities from their current book of business. They are getting very good at asking their current book of business for external opportunities or for referrals outside of just their own clients. And they're getting really, really good at it. And so when you look at this virtuous cycle, this top of the funnel through bottom of the funnel, back to the top of the funnel, what I'd like to say is that Rocket is really trying to, own the entire customer journey from the first click or anticipation of having a housing need to the final payment and having financial freedom, right? From first click to final payment. And that is a really strong platform. So just as a point of reference, how's this working for Rocket so far? Now, it's super early in their construction of their trifecta of Redfin, Rocket, and Mr. Cooper, but their Q2 results are kind of interesting. So they did $29 billion in mortgage volume in Q2, which was up about 18% year over year, and it was up almost 35% quarter over quarter. But an 18% increase year over year, especially at their scale, that's pretty big. That is a pretty big jump. Their revenue was flat. It was, like 1.36 billion, versus 1.31 billion. It was very flat. Net income was down significantly from year over year. The previous year, they had made a couple $100 million in Q2, but they did turn around because in Q1 they lost $212 million, and so in this year in Q2 they made $34 million. That's a $246 million positive swing. So they went from a big negative to a positive, generating $34 million. But the other thing that is surprising in their numbers is that, and by the way, their margins are slightly down, and they predicted in the Q2 statement, they go, we think margins have stabilized. We think we're going to be able to maintain our margins, which are around about 280% or 2.8. So their margins are okay, not bad, 280 basis points gain on sale, but they also, the interesting thing, they said they have $9.1 billion in liquidity, which of course provides them plenty of runway for future investment, growth, acquisitions. They're not done growing. They're not done getting better. So just no. But so they had a little bit of margin compression. Their expenses were up considerably. But they were gaining more purchase market. They had gained significantly more refi market, and their equity loans had doubled year over year. So, their strategy is winning in a really tough market now. So I think, to me at least, I've said some scary things. I've said, oh my gosh, AIs are replacing, AI chatbots are replacing loan officers, and Rocket has this virtuous cycle that is just a killer to the rest of the industry. But I'm not at all worried, because there is a place to win. There is a strategy to win, and you can compete against Rocket and win. And that's what we need to focus on. We need to understand what their strengths are, and then we need to figure out how do we beat them, or how do we get our market share, right? And so the thing I would say as I finish this up by just talking about what's the way forward, the first thing is, don't try to out-rocket. That's not the road forward. It's just like Steve Brown used to say, that the future Steve Brown said, you don't try to outdo Amazon, do what Amazon can't do. And it's that simple too. Don't try to outdo Rocket, do what Rocket can't do. It's that simple. If you're a real estate agent, do what Zillow can't do. And so what is it that Rocket can't do, and where can we succeed? Because I'm telling you, AI is going to replace loan officers. They're going to replace loan officers that don't level up, that don't provide more value, that don't provide unique value, right? And so how do we, and so when you look at Rocket, you can't separate the Rocket experience from their AI platform. You have to look at them together. And so here's some things, here's some ideas, and I know we've talked about this before, but the thing is, if you want to succeed as a self-source loan officer in the future, you need to get to the customer first. I cannot emphasize that enough. And first doesn't mean it was referred to you by a real estate agent. First doesn't mean it was referred to you by a CPA or an insurance agent or even a builder. Those are when you a builder and a captured account, totally different environment. But if you're self-sourced, you need to get to the consumer first. And that means you need to own the relationship early, and you need to own the relationship to keep that relationship, that person, from going into the Rocket ecosystem. Like, the way you keep it out of their funnel is get to them first and build a fence around them, right? And so how do you get to that consumer first? And what can you do that Rocket can't do? Well, the first thing is get belly to belly. Rocket can't get belly to belly for the most part, not excluding Bay Equity loan officers, but there's only 150, but excluding Bay Equity loan officers, Rocket loan officers cannot get belly to belly. They cannot go see people as people, right? So that means, you need to really, really step on the gas about doing home buyer seminars. And home buyer seminars could be first-time home buyer seminars, generational wealth transfer seminars, VA seminars, investment, move-up buyers, financial literacy, on and on and on. But you need to master how to get in front of the customer, because that's something Rocket can't do, right? And then you need to build these local referral networks that are belly to belly, meaning that you're working with other professionals out into the market, highly visible, right? That you're physically in the market working together to generate leads for one another. And then the thing too you really need to embrace the first-time home buyers as a future, because today few first-time home buyers have a very long incubation period. It's no longer 30, 60, 90 days. For that matter, it might be a decade of incubation. How do you incubate a borrower for a decade? How do you be belly to belly, valuable, resource they count on for years, not just a few 30-day cycles? But if you can master that, if you can master how to educate and empower first-time home buyers, and you can be present, you can win. Once again, it's doing what Rocket can't do. So first solution is get there first. Get to the borrower first. Get to them first and be human. The second thing, be hyper local, right? Most of Rocket's platforms are call centers, are centralized. They're machines, right? Be hyper local. That means you need to know your neighborhoods inside and out, right? You need to know your database inside and out. You need to have relationships with your customers, not just sending them a recipe card, but really deep, caring relationships. You need to show up physically in the space. It's not good enough to show up digitally. Sponsor local events, coach the Little League team, be on the PTA board, right? Be the mayor of your physical territory and get out there and shake hands like a politician. Because remember, do what Rocket can't do. You're not going to see a Rocket loan officer down at the Little League field or at the bake sale or at the car wash. You're not going to see them there. And so if you want to do what Rocket can't do, be physically present in your market. The next thing is, the third thing I suggest is you got to offer a human experience that AI can't replicate. You got to add the human part. Now, if you listen to Varun, if you listen to Rocket, if you listen to the trifecta of all three companies, they say they are a human company first. I believe Varun is trying to build a human connection that's supported by technology, but I think we can out-human that giant platform, right? And so we need to work on building emotional trust, emotional relationships. I used the word caring before, that we care about the people we serve, not just in transaction, but as people through their lifetime journey, that we have that caring connection. We need to offer a nuanced guidance that algorithms can't match. And that means customize, specialize. That's what nuance means. It means that when we meet with somebody, we sense what they're feeling, we have empathy, and we build a journey that matches what they need, right? When they fear making choices or don't know what to do or uncertain, that we match that and honor that. That's the nuanced guidance. And then, of course, we need to deliver a service experience that feels like it's completely concierge level, personalized for them. And here's something else. If you want to beat AI, if you want to beat some of these giant platforms, it's going to be counterintuitive. Slow down, right? Because, we talk about a borrower being approved for a loan in 10 minutes. Do they want to go that fast? Really? Or do we really want to move to their house in 7 days? That scares the bejesus out of them. And the whole thing about AI and the whole thing about technology now is speed. But we haven't asked humans if they want to go that fast. And I'm telling you, if you slow down, that's how you separate from AI. If you slow down, if you give space between words, space between feelings, that's when you connect. And so I would recommend slow down. So that's the human experience that AI can't replicate. AI can't slow down. It's not going to go, let me marinate on that for a minute. Let me really feel what you just said. It doesn't have the ability to do that. That's what humans can do. Now, number 4, dominate social media. Dominate social media. You have to be visible where your clients are. You cannot be invisible. So why it's critically important to be local, it's critically important to get belly to belly, it's critically important to add a human experience, but you also have to be where they are. You also have to have some presence digitally, and digitally also is is proximity. And so get close to them. And, in that, you just need to just consistently be where they are on social media, add value all the time, and try to be memorable enough so that when they think of mortgage, they think of you and not Rocket. So one last thing, and we'll wrap this up. The 5th thing you have to do, and I say this quite a bit, you have to match value to compensation, right? So Rocket can offer really low cost at scale. They can offer speed. They can actually even delight the customer. What you can't be is less valuable and more expensive. You have to figure out how to be more valuable, and then match whatever value you're delivering to your pricing. And if their AI bot costs $0 to convert 3 times better than a human, you got to check your whole card there and go, what am I charging? And you have to be humble. You can't just go, oh, I'm sure their AI bot isn't as good as me. You have to be more humble than that. We all have to level up our value, calibrate our comp so that we can compete, right? Because we're not going to get the offer to do these other things to compete unless we do that first, right? And so, I don't know. I was so struck by their Q2 results and what they were, speaking to. And this is even before they add Mr. Cooper and their Mr. Cooper's 7 million clients. And heck, Mr. Cooper converts at about recaptures their clients at about a 49% rate, depending on what the latest report is, while Rocket, recaptures 83%. I mean, it's going to be a monster. We're all going to have to compete, but competition makes us better, and competition makes us better servants of our borrowers or of our clients. And that's good for everybody. When we get better and we're better servants and we do a better job serving our people, then everybody wins. So I personally, I welcome the competition, but whether it comes from a big platform like Rocket or it comes from technology like AI, the competition is good for us, but you have to move now. You have to mobilize now. You have to start heading towards where you need to be to compete. If you wait until, if you wait until all this is solidified, you're going to be out of business. And so move now. Start doing the things that we're talking about now. As I mentioned, I wrote an article. I published it on LinkedIn today. Check it out. I have most of the stuff we talked about here summarized there, so it could be a roadmap for you. I suggest the 5 things we need to do to win in the future. The future is only scary if you don't change or rise up for the future. It's scary if you're left out because you're stuck in the past. Let's just evolve. We can all win. The customer is going to win. So it's good for everybody. And that, thanks for giving me, I know I went a little long today. I really appreciate you guys giving me a little bit of your time. Hope you got a lot out of this. Check me out on my socials. I look forward to talking to you again soon. Thanks so much.